Hello and welcome to Trading Hour, live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me is Ekta Batra. Ekta, good morning. Well, another day of consolidation is what we are seeing in the markets. Nifty quite flat right now. It has come off from the highs, around 70 points from the highs of the day. But what's supporting today is Reliance Industries. So we'll speak about that in greater detail. But mid-caps, they have come in for some profit booking. Remember, this was an outperforming index yesterday. But today, the mid-cap index is down around 0.4%. We do have the Bank Nifty as well, which is down 0.2%. But other than that, the other two indices, be it the Sensex or the Nifty, for now holding in the green. But the way we have seen that slide on the Nifty Bank and in the mid-cap index as well, we'll have to see whether we are able to hold on to those gains or not. Nifty as well, down further at the day's low.
Hi, Sonal. Yes, absolutely. You know, overall, it seems as though the markets are currently in wait and watch mode. They're just biding time. But nonetheless, we do have a lot of cues to watch out for. It is the 1st of July. So that means that it is time for auto sales. We also have the end of Q1, which has taken place. And hence, we have a lot of the Q1 business updates, which will start flowing through. And not to mention that earnings will start kicking off soon enough. But separately, in the near term, I think something that the market will be eyeing very closely is the US-India trade talks and how exactly that develops in the next couple of days. Lot of stocks in focus, so let's not forget that it is a stock specific day for us. So we have Apollo Hospitals, Gabriel India, and we have 3 new listings as well to reckon with in today's trading session: Ellen Bar Industrial, Globe Civil Projects and Kalpataru Projects. So all of these stocks are in focus as well. But let's kick off the show with the big boy Reliance Industries, which is trading in the green after Nuvama has given a buy call to the stock. Sonal, tell us more.
Oh, yes. So Reliance is supporting some of the gains that we were seeing on the Nifty today, and it's a big contributor as well. There's an interesting note which has come in from Nuvama on Reliance Industries. They talk about their channel checks, the market drill down, which suggests that Reliance Industry has commenced selling modules externally. Now, remember, this is a part of their new energy business where they are entering the solar value chain. Reliance Industries announced the start of its first line of HJT module manufacturing facility of 1 gigawatt, which is a type of module, and it has offered to sell these modules in the lucrative domestic market already. And they say, Nuvama says that the introductory realizations for these modules are at a 5% premium to the TOPCon modules, which is another type of the solar modules. At premium pricing, Nuvama thinks that at 10 gigawatt of peak capacity, Reliance Industries could add around 3,800 crore rupees, which is around 6% of their consolidated FY25 PAT. So this is a big number once the peak capacity is achieved as well. They are now watching out for any updates, any announcements in the AGM, which is expected in August and September. In addition to integrated solar facilities, Reliance Industries is also planning on 30 gigawatt hour battery facility. Also, on the basis of this, Nuvama has gone ahead. Their SOTP-based target price has been raised to 1,801, which is highest on the street because they are factoring in higher than expected module profits. This is just one part of the energy business which they think Reliance will do very well in, and for others they are watching out for. They have a buy rating on the stock and they are quite positive on this particular name, Ekta.
Okay, all right. So that's on Reliance Industries. Nuvama has reiterated its buy call on that particular stock. But I am watching Apollo Hospitals, which is just about following Reliance Industries in terms of gains, or rather exceeding right now. So Apollo Hospitals is the top gain on the Nifty at this point in time. The reason for that is that they have announced a plan to demerge their pharmacy, digital health and pharma distribution businesses into a new listed entity, which is NewCo. Now, the transaction involves 3 steps. The first step is demerger of the omni-channel pharmacy and digital health, Apollo 24/7, amalgamation of Apollo Health Co., which is contains Apollo 24/7 with the new company, and merger of KMed, which is one of India's largest pharma distribution companies at this point in time, into NewCo. Now, Apollo Hospital shareholders will receive 195.2 shares of the new company for every 100 shares of Apollo Hospitals. New company is expected to be listed between 18 to 21 months. Apollo Hospitals will retain a 15% stake. Components in the new company will be Apollo 24/7, Apollo Pharmacies, KMed and Apollo Hospitals telehealth unit. The projected revenue is 16,300 crores for FY25 and they're targeting 25,000 crores by FY27 with a 7% EBITDA margin. The structure and the reason why you're seeing Apollo mainly gain today is because it removes the holding company discount. Morgan Stanley has written on it. They have an overweight rating and a target price of 8,058. The new company has aggressive revenue and EBITDA targets, and if they meet them, that would generate shareholder value according to Morgan Stanley. Citi buy target price 8260, development positive for Apollo. They expect a discount to narrow with a separate listing and a lean business structures. That's on Apollo Hospitals. They do have a call at 12 p.m. today, so more details then. But the other stock which is really surging today is Gabriel India. Hormuz joins in to tell us why the street is excited over their merger with Anand Group's auto and related businesses. Tell us.
Pretty much the stock of the day is Gabriel, a 20% upper circuit, and we spoke about this in the morning as well. They're consolidating the Anand Group's automotive businesses into one entity, and this is going to be done through multiple steps. Now, firstly, they're going to merge a company called Anchemco with the Asia Investments Private Limited, which is AIPA, and then the automotive business of the AIPA, which includes Anchemco and the other entities such as Dana Anand, Henkel Anand and ACYM will first be demerged from AIPA and then be merged into Gabriel India. And as part of this, Gabriel is going to offer 1,158 shares for every 1,000 shares that the shareholders of AIPA have as of the record date. Now, the deal is being done at an FY25 EV to EBITDA multiple of 8 times, and it is subject to approval from regulatory authorities, the board of the directors as well. And once that is achieved, the merger is likely to take effect within the next 10 to 12 months. And once that happens, the promoter shareholding in Gabriel will go up from 55% to 63.5%. And they've cited transformation of Gabriel, increasing their domestic as well as global presence, and simplifying the group structure and answering shareholder concerns on product diversification and M&A strategy as some of their key rationale behind such an initiative. And the street had a whiff of this because the stock was up 20% in the last 5 trading sessions, and now after the news has been announced, the stock is up another 20% today.
Okay, all right. That's a 20% upward circuit on Gabriel India. Thank you so much, Hormaz, for joining us with all those details. Let's go across to Nimesh now. He's standing with the standout brokerage report of the day. Nimesh, what do you have for us?
Well, today's standout was an IDFC First Bank, and the stock is reacting as well, up 4%. So Investec has today upgraded the stock to a buy from hold, and they've sharply raised the target price to 90. Now, Investec note says that they see IDFC Bank delivering a 29% core PPOP CAGR over FY25 to FY28, and that will be aided by 80 basis point reduction in the cost to asset. This combined with a 90 basis point decline in credit cost, that would mean that IDFC First Bank can report an ROA of close to 1.4% by FY28 versus 0.5% in FY25. So that's going to be a big jump as far as the ROA is concerned. Also, the operating leverage is playing out at the bank level, though it's not visible in the numbers, but they believe that this is now quite visible. It should be quite visible and can play out over the next few quarters. Also, the note says that the IDFC Bank's core EPS growth is quite compelling. So on back of all this, an upgrade to a buy on IDFC Bank, First Bank stock, and Investec has now raised the target price to 90 rupees.
Okay, all right. Thanks very much for that, Nimesh. So that's our standout brokerage segment. But CG Power is in focus as the company is looking to raise funds. Nimesh, you're still with us, so tell us more about this.
Right, well. For CG Power, the company had launched a QIP book last evening to raise close to 3,000 crores. The equity dilution would be less than 3%, so not large dilution, and they will raise 3,000 crores. Even the floor price of 660 suggests that the discount is not very large, just 2.5-3% discount to the SEBI floor price. So that's the detail. 3,000 crores, 2.8% dilution, and a very low discount. The interesting part is the fund proceeds. That will be largely used. So the large part of the fund proceeds will be used for setting up the OSAT facility, which they had announced earlier. So that's one bit. Second, they're also looking at investing some bit of the money for the power transformer plant. So that's where the proceeds will be used. And third and last, they may also use some bit of proceeds for inorganic growth opportunities. So these are the 3 ways they will use these funds, but 3,000 crores is what company is looking to raise. And I understand there is a very strong demand from institutional investors in the QIP book.
All right, so that's about CG Power. Thank you so much, Ramesh, for joining us with all those details. It's time for a short break now. When we come back, we'll discuss what's buzzing in the commodity space with Manisha Gupta.
Welcome back. Still tuned in to trading hour at this point in time. The markets are just about consolidating. So we have the Nifty, which is just about higher by around 3 odd points. And the mid-cap index also just about trading in a very tight range this afternoon. So we have the advanced decline ratio, which is trending a little more on the declining side. So let's see whether that can improve as we go along. But overall, you'd have to say that it is currently 1:1. But there was that crisscross which took place probably around 45 minutes an hour into trading, where the decline started to exceed the advances. But nonetheless, a lot of stocks which are in focus. So just watch out for Keystone Realtors, which is doing well in today's trade, up around 5 odd percent. We have Blue Star, which is gaining as well, so up around 3 odd percent for that particular counter. And a couple of others which stand out are AB Capital, as well as even a stock such as Apollo Hospitals. Because of news, both these stocks are currently at fresh 52-week highs at this point in time, and giving it company is Deepak Fertilizers as well. Well, talking about fertilizers and everything to do with the monsoon, we have Manisha who's joining in to tell us what to focus on when it comes to the monsoon. Manisha, over to you.
Thank you for that, Ekta. Well, yes, it's a lot of boxes that monsoon really seems to be ticking for 2025 right now. Well, if you look at the number for the month of June, we are 9% above normal, so 109% of LPA. Now, yesterday was IMD's press conference, and the forecast that they have put out for the month of July is also above normal at around 106%. Between June to September, the estimate stands above normal rainfall of 106%. So very strong numbers showing there. I mean, we still are waiting for a lot of rains in Mumbai. But when you look at the numbers, it tells you that the geographic, the spread of monsoon also has been on the positive side there. So this is the latest data that has come in from IMD. All India until now is plus 9%. And the best of the rains clearly have come in for Northwest, up 37%. Central India, which is the agri bowl for the country, also has seen very strong gains, 24% above normal. It is the south, east and northeast areas which actually have seen lower monsoon, especially the northeast part of the country, which is seeing 17% of deficiency till time right now. But as I said, the monsoon has been ticking a lot of boxes. IMD also tells us that it is by 29th of June that monsoon has covered entire India. Usually that happens by 8th of July, but we've seen monsoon do that much before time there. This is the earliest that the monsoon has covered all of India since 2020. Remember, monsoon onset this time around also has been quite early. That happened almost on 24th of May. We saw good progress until 29th of May, and then it was a stall of monsoon and revival only seen from 16th of June. Since then, if you look at the last 15 days, has been quite positive for the monsoon, with an expectation that going forward, the month of July is going to be even better.
Okay, all right. Month of July, even better. Let's see which way things go. Thank you so much, Manisha, for always joining us with these updates. Very important to know where rains will go this time around. But we'll slip into a short break. When we return, we'll discuss market technicals with Midesh Thakkar and also discuss their top trading bets. Welcome back. Still tuned into Trading Hour on CNBC-TV18. Well, we've been mentioning it's a very stock-specific day. We have auto sales which are coming in. For M&M, overall sales are up 14% on a YY basis. That looks like a good number. We'll just compare it with what the estimates were, and we'll get in Sudarshan as well. The stock has come off from the highs. It is actually at the day's low. So we'll just look at what the numbers look like and get a deeper analysis as well. But Torrent Pharma, after that big deal, continues to be in focus. There was a conference call, some takeaway takeaways from the management. The stock has recovered sharply from the lows as well. Ekta, what were the takeaways?
Well, yes, interestingly, they did hold that call at 4 p.m. So that's the reason why you are seeing a lot of the notes come through today as well. But I did hear the call, and a couple of important takeaways was that according to Torrent Pharma, first year of the merged entity of which will be with JB Chemicals should be EPS accretive according to them. Now, one of the key things has been debt concerns. So how much debt will Torrent Pharma take on? How leveraged will they be? So there were quite a few questions around that. They said that the leverage ratios look comfortable to them and would be below 0.5 times 2 years post the deal. Now, separately, they will see if equity is required to fund the deal. Now, remember that they do have around 5,000 crores in terms of a fundraising approval, which they took in May of 2025. So whether or not they actually go ahead with the QIP or whether or not they even think that they need equity is something that they will assess. They expect procurement savings, combined manufacturing to basically help in terms of the deal going forward and synergies. The timeline to complete the transaction is between 15 to 18 months. CCI approval, it takes around 4 months, so they're expecting it to probably come in by the end of December. And after CCI approval, they do expect expedited approvals, but nonetheless, they are giving a timeline of 15 to 18 months to complete the deal. Valuations softened versus last year, which made the deal attractive to them. So a lot of people did, questions were around the fact that why did you give up the deal and then go back onto the negotiation table. So they said that the valuation softened, so the deal was looking way more attractive. But nonetheless, that's on Torrent Pharma. NMDC is under pressure post announcing a price cut. Nigel is here with the details on that. Nigel.
Well, that's right. NMDC has gone ahead and cut prices effective today, and they've cut prices by 600 rupees and 500 rupees on lumps as well as fines respectively. The revised pricing comes up for you on the screen as well. The street was sniffing this, but remember, this is the second straight month where we're seeing a price cut. In the month of June, the quantum was far smaller, around 150 rupees per ton. So that's followed up with a 500 to 600 rupee price cut. And this quantum is a little bit disappointing because in the monsoon season, you're bracing for a price cut. But such a large price cut of 500 to 600 rupees, that's a little bit disappointing. Well, what could the reasons be? Globally, remember, Chinese demand hasn't been great. And when Chinese steel demand isn't great, that's what puts excess supply into the market. So global pricing itself has been under pressure. And here in India, we have the monsoon season. So a lot of steel mills, they take maintenance shutdowns and the likes. So because of that, demand domestically as well will be a little bit softish. Put everything together, the street is disappointed by the quantum of this price cut in the month of July. Back to you.
Okay, take that point. No wonder the stock is lower by 3%. Thank you so much, Nigel, for joining us with all those details. Let's get in a technical check on the markets as well. Mitesh Thakkar is joining us for just that. Mitesh, good morning. Thank you for joining in. Well, consolidation is what we are seeing on the Nifty currently. The mid caps have come in for some pressure. Even the bank Nifty is not doing too well. What are the important levels to watch out for and your individual picks?
I think the indices, one, they are slightly overbought after the rally which started last week, Friday, Thursday. And we also hit an important resistance around this 25,700 zone, which is a falling gap, and the market was declining from higher levels. So given the fact that we are overbought and, we have some supply pivots, I think good chance that, the markets will be into some kind of consolidation for some time. And that is what I think we are witnessing. My understanding also is that the overall bias is on the long side. So maybe after some consolidation or pullback, you would again want to go long. And on the stock side also, we're telling in more of long bias.
Okay. In terms of specific stocks, how would you approach, say, an Apollo Hospitals as well as a Reliance Industries today, Mitesh?
Yeah. So Reliance is something which I like a lot. I think that's the consolidation has broken out and the weekly charts are very good over here. So Reliance, I would still recommend buying the stock below 1500. I think 1580, 1590 is the near-term target zone. Apollo Hospital has broken into all-time highs, slightly come up from the overall, the new high level, because again, the stock is slightly overbought, but a pullback toward this 7400, 7370 zone is the entry point if somebody wants to buy afresh. I think over a period of time, the stock will head towards 7800 plus levels.
Okay, all right. Thank you so much for joining us with those details and your outlook on some of these stocks, Mitesh. We'll slip into another break. Up next, we'll discuss market fundamentals now with Anirudh Garg from Inva Asset PMS. Stay tuned for that.
Welcome back. Well, for the markets, not moving too much. So we have the Nifty just about flat, advanced decline ratio also quiet. So overall, it's a stock-specific day. A lot of stocks in focus on news, but overall for the indices, we're quite quiet. But how do we approach the markets going forward? We have Anirudh Garg from Inva Asset PMS joining in now to discuss the market fundamentals and his top sectoral picks. He's with us in the studio itself. Anirudh, hi, welcome to the show. Thanks very much for joining us in our studio. Wanted to just start by asking you about your overall take on the markets. We are done with probably a lot of the negatives, when it comes to the geopolitics, at least for some time. What's your sense in terms of how we approach the markets going forward? What would be the key trigger? Would it be earnings or would it, say, be the US trade negotiations with India?
Okay. Thank you, first of all, for having me. I think our stance has been very, very clear since February. It was February, around mid of February, when we went all in and deployed 100% of our cash that we were holding before it into equities. And the triggers for the market, I believe markets, I had given a podcast then, and I was very, very clear that we should see, with the relative changes that are there in the Indian market right now, we thought that we should hit 26,300, the all-time highs, maybe in the next 2 to 3 months. And of course, that's also just a number, but overall, we have to look at the broader picture. The broader picture is very, very intact. Look at the GST collections in India. We are at 2.05 lakh crores. This has been the highest ever with a 16% growth. So I believe this is a relative change that will take the markets forward. Also look at the SIP that is coming in. We are at 26,000 crores. Yeah. So these are the factors that are taking things forward. And of course, as you rightly mentioned, the US-India trade deal, I think it'll be a game changer, especially for export-oriented units, especially in the auto sector, auto ancillary sector, maybe in the textile sector. We are seeing a lot of things moving up and down in the textile sector. I've been talking to manufacturers. So I basically belong to Ludhiana, and a lot of textile hub is there. So their orders are full, the capacities are full, they're running 100%, they're installing more capacities. So I think it's a golden moment that we are going through India, though the valuations are up, and India always has commanded, I think, above average valuations when it comes to developing and emerging markets. Why? Because we are the only place except the US where the democracy and the demography are both in place. Because of this factor, this rare combination is very, very hard to get.
Okay, so 2 points in that. You spoke about systematic investment plan or the SIPs at 26,000 crore rupees. You spoke about how we are trading at higher valuations. So 2-part question there. SIPs are higher, but so are the cancellations, right? So does that indicate there's some caution in the market from the retail side? And second, on this geopolitical crisis that we've been seeing, how are we not getting impacted by that at all? Because supply chains, be it in the chemical space or be it in the other export-oriented sectors, is getting impacted to some level.
Okay. So to answer this point, let's address the geopolitical concern first. See, the geopolitical concerns are there for the very, very short term. Yeah, of course, you're very right in saying that the supply chains are being disrupted and everything, but they're being done only for very, very short term. In the market, it looks for at least the next 2 to 3 years of earnings and sales and everything. So I believe that from that point of view, I've been a firm believer of the fact that a bull market, it rests and increases its pace on bad news. So I always tell my team that a market feeds on bad news, a bull market feeds on bad news. And similarly, the opposite is true for a bear market as well. So I don't think this geopolitical correction, any corrections that come due to geopolitical tensions and everything, I think they'll be very, very short-lived and just an opportunity to buy.
And on the SIP bit, do you think that's
the SIP bit is also, again, we have to look at the broader picture. The broader picture is moving up. In the short term, if cancellations are there, that is due to the fact that there is fear in the market. Yeah, that fear in the market would lead to, until I believe on the other side, I believe the cancellations are good. If I'll tell you why. Behaviorally, I'll tell you. Because the more the cancellation, the more is the fear in the market, and the more is the opportunity in the market to go up. As the confidence increases, as everybody, because of the FOMO factor, steps in, the markets, it becomes heavy and it's difficult for you to earn. So I think overall, the SIPs are going up. That is the broader trend you should focus on. Cancellations in the short term are actually an opportunity which is indicating that there is still steam left in the market.
Okay, your top holdings are interesting. You have BSE as one of your top holdings, as well as Mazgon Docs. Both these stocks have run up very significantly. You probably entered at times where they had already seen a significant run up as well. How much are you sitting on in terms of returns at this point in time, and when do you think you'll probably exit those stocks? What's the target that you're looking for?
So the first time we bought Mazgon and BSE, both have been our long-term holdings. Though we keep on trimming them, buying them again from time to time. But I think these are the two stocks that you have talked about are our long-term holdings. We bought Mazgon split bonus at around 650, so 300 something, and have been holding it since. And the relative changes are very, very big when it comes to BSE or any other companies in the financialization of asset space. This asset space is doing amazing in India. Let's look at the last 10 years. 2015, we had around 2 crore demat accounts in India. Till 20, they increased to 4 crores, doubled in 5 years. From 2020 to 2025, from 4 crores, we have gone to 20 crores. We are touching 20 crores now. Yeah. So these companies, same is about the folios. The folios have gone up 8 times in the last 10 years, from 3 crores to 24 crores. Same as we talked about the SIP inflows, from 3,000 crores to 26,000 crores. Yeah. The total asset under management of the mutual fund industry or the financialization of assets industry is around 72 lakh crores. Yeah. So which has increased 6 times in the last 10 years. So overall, this sector has a lot of tailwinds, and still we are just at 10%. Developed economies are at 60, and people ask me, will we be able to touch the developed economy percentage? I believe that why touch? We'll be able to surpass them. Yeah, the reason being we are better savers. The saving is in our blood, Indians are better savers and better investors. So I believe that this industry for the next few years should keep on rising.
So won't the growth level slow down? Because we've seen that stellar rally already in terms of growth, in terms of folio additions. Don't you think that growth will slow down right now, and most of it is already priced in?
No. Could we say that this in 2020? In 2020, in the last 5 years, we saw 5 years a double. In 5 years, it has become 5x. So I don't think it will slow down. Of course, there'll be moderation, and that we are seeing in the last 1 year as well. But overall, the size is becoming big. And as a PMS or a mutual fund industry, your overall AUM size matters. The overall AUM size is getting bigger, and as the market increases, now you have set the culture right. It's a decadal generational shift which has happened. Once you have got the base, now the market is also going up, which is increasing your base. Yeah. So overall, I believe that the fees and the opportunity in this sector is very, very large.
Okay, so those are the Eicher Motors sales. The Royal Enfield sales are up around 22% on a year-on-year basis, and in fact are better than what the street was anticipating. So just watch out for that. Eicher Motors in focus, up 22% for that particular stock in the past 1 year. Anirudh, you've mentioned that we're going to see probably all-time highs in the market. You've invested in stocks which have performed really well. But where do you go from here when it comes to stock picking? Because the market gets tougher in terms of valuations, in terms of good quality stocks as well. What is the criteria you're looking at? What are the kind of stocks that you're picking now?
So our focus, our strategy is based on relative change. By relative change, I mean advantage that a company, sector or a group has today which it didn't have earlier. So we are just focusing on relative changes and investing in the better companies out there. Firstly, we talked about the financialization of assets.
Can you give us some examples?
See, for financialization of assets, we've moved from FD-oriented culture to an equity-oriented culture, which is a generational shift. Doesn't happen often. A lot of effort has gone from SEBI, from MFI and mutual fund Sahi and all. And over the last 20, 25, 30 years, we have developed the trust where the public can now trust mutual funds as they trust a bank. Yeah. So very, very difficult to gain trust. So this is one theme which is out there. Second, I believe that we talked about the GST collections at 2.05 lakh crores. This is giving a huge opportunity to the capex-oriented sectors. Now, one has to focus that the capex-oriented sectors like railways, defense, infrastructure, power, they've gone up significantly in the last 5 years. Now, the most critical ones out there, without which you cannot survive. For example, defense. We've all seen defense go up many folds, but I think it's just started. We are on a global turmoil. As you rightly said, there's global wars going on throughout the world, and India.
I just want to interrupt you there. We are, the theme is probably already played out to a large extent. So within that theme, which are the stocks you pick, considering that many of the stocks have already seen that strong run up?
I think within the theme, as I rightly said, that we should focus on companies which are now focused on earnings. We have seen the first part of the rally play out, where they were re-rated because they were neglected. Now, where the earnings would catch up. For example, something like a Masgaon Dock, we like a lot. Something like a Bharat Electronics, we are holding in our portfolio. Something like Bharat Dynamics, we are holding in our portfolio. The better ones, which are getting orders and which are able to execute those orders faster. Yeah. So something like an HL we are not holding because we believe that there is a lot of delay in execution of orders. So for different sectors, different things you have to see. Especially for capex, the main thing is execution, because orders are coming. Now the orders, a significant thing I would like to mention is that because of the delayed payments from the government in the past 1 year, the order outflow from the government has now reduced, and it's only coming to critical components and critical projects. So we should focus where the critical projects are. Something like a Kavach.
Right.
Yeah.
Okay, all right. Take that point. A very interesting discussion there, Anirudh. Thank you so much for joining in. So that's the word, and that's the fundamental outlook on markets as well. We'll wrap up on this conversation for now, but let's talk about Raymond Realty. That particular segment of the Raymond Group got listed today. It was a muted listing, but the shares have risen now. My colleague Rachna spoke to Raymond Group Chairman Gautam Singhania on their real estate and engineering businesses and the company's 20% margin threshold decision. Listen into that conversation.
So I think each business is now independently listed. Our lifestyle is independent, real estate is independent. We're talking about real estate. So real estate is net cash on its balance sheet. So it's got enough firepower to take on new projects and execute. And each business has its own strategy. So I think we're in a very comfortable space today.
You've often spoken about this Raymond 2.0. Like I said, you've gone from being known as a complete man to now a conglomerate that goes definitely beyond, as the tagline rightly says. If you could take us through this three-pronged strategy. One is, of course, real estate. And now that we are here at the listing of it, how does real estate drive in the change that you're trying to bring in with this 2.0 strategy?
No, see, we were a lifestyle company. We had a small engineering business, and each business has grown. So the engineering has grown. We bought many engineering last year, so that we got aerospace, defense that added to that portfolio. And we had historical land in the company in 2019. And we said, should we sell it? Should we not sell it? Should we develop it? And I think the decision to develop it was a tough one at that time, but we took it head on.
Right. Like you said, the Pitin sort of inspired you to get into it. And would it be wrong to say that you've carried that spirit forward now that when you've made it clear that minimum 20% margin threshold is what you're looking for, otherwise you'll walk away from the deal? Is that the spirit that you carry forward?
See, we put very strong financial parameters into the business. We have corporatized this business. We're a corporate. It runs with a top-class board. And there are certain guidelines. Now, everybody's in business to make money. We're going to do it with our financial discipline. And I believe that if you do this business with financial discipline, you will succeed. So far, it's held us good, and I just don't see any reason why it shouldn't hold us good in moving forward.
We saw lifestyle, of course, that's a very big part of the group, and we've seen it all our lives. Now real estate, and like you said, engineering is a very small part of it now, but moving forward, what's the outlook with engineering?
See, we have engineering as three parts of the business. We have the old engineering files business, we've got the auto component business, we have the aerospace and defense business. Each has its own growth strategy. The files is always going to be a slow 4, 5, 6% growth. Auto can grow at 10%, but the exponential growth will come from aerospace and defense. I think there's a huge opportunity for India on the aerospace and defense side. Maharashtra is also coming up with an aerospace defense corridor. And Make in India program with Modi ji has been very successful.
Okay, so that's Raymond Realty. Gautam Singhania talking to Rachna there. Well, it is just about quiet for the markets now, so nothing more to incrementally update. In terms of specific stocks, Eicher Motors has actually moved up post the auto sales. So it's now at the high point of the day for Eicher Motors. It's up around 1.5%, reacting to the Royal Enfield sales, which in fact have come in better than estimates. So we'll do one thing, we'll take a short break, but on the other side, we will in fact get in touch with Rima to give us an update on the auto sales, and separately, just a quick update before we let you go. Remember to tune in to the all-new CNBC TV18 Prime, bringing you insights from policymakers, business leaders and economists shaping both the world and India's future. CNBC TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune into CNBC TV18 Prime at 12 noon for the Global Reset, at 1 p.m. for the Big C, and Global Lens at 8:30 p.m.
Welcome back. You're still tuned into Trading Hour. Well, it's 1st of July, so of course we are going to talk about June auto sales. Those numbers are trickling in. Rima is here with the details and the analysis. Rima.
Thanks so much for that. So the standout this time has been Eicher Motors, where the numbers are higher than street expectations. So the total Royal Enfield sales are about 89,500, much higher than the 86,000 that we were anticipating, clocking a growth of 22% in the month of June. The key drivers for this is, one, their exports. That's just about 14% of the overall volumes, but that's seen a growth of more than 70%. And even the smaller engines, sub 350cc, has seen a pretty good growth. M&M continues to be a strong, but it's largely in line, especially on the auto side. So the total automotive sales have come in at 14,000, in line with expectations. Passenger vehicles is doing pretty well, but commercial vehicle sales was flat. Tractor sales growth has been very strong, 13%. It's come in at 53,400 units, ahead of street expectations. And the company says the June growth was primarily driven by cash flow from the Rabi crop harvesting and widespread arrival of the monsoons. Now getting to some of the other ones. So Bajaj Auto sales were disappointing. And the challenge is the domestic sales. So overall sales growth was just about 1%, but the domestic sales growth declined by 13%. Exports continues to chug along very smartly, 21% up. Escorts Kubota numbers are largely in line with expectations, clocking in a growth of 2.2% in the month of June. Back to you.
Okay, all right. Thank you, Rima, for joining in with all those details. That's about the auto space. I'm watching out for the chemical space because there's an interesting note that has come in from Nuvama. They had a specialty chemicals day, and 3 key takeaways that I could take from that report. The first one is that the government of India, it has initiated investigations to potentially impose anti-dumping duties on key chemicals, be it fluoroelastomers, para-nitrotoluene, para-tertiary butyl phenol, and the other 2 names will come up for you on the screen as well. And if this actually concludes in the positive way, there are likely beneficiaries. For FKM, it's Gujarat Fluorochemicals. For PNT, it would be Deepak Nitrite, Aarti Industries. There's Sudarshan Chemicals and Bodal Chemicals for Beta Naphthol. For PTBT, it would be Vinati Organics and Lakshmi Organics and Jubilant Ingrevia, if there is something on methyl acetate as well. The number 2 takeaway was that agrochemical companies globally are still very cautious. They are issuing single-digit volume growth guidance for crop protection chemicals and also indicating muted pricing trends. This has been going on for 2 years, and that continues to be the trend in the industry. MNC chemical and agrochemical companies are still cautious about this calendar year and the one coming up next as well. The third one is there's been a lot of supply disruption globally. We've been seeing crisis come up in geopolitical arena, and one of the major chemicals, which is H acid, which is a key dye intermediate, that is run into short supply. This is coming from China. It has led to increase in prices of the dye sector overall. Prices are expected to improve for the period, and they also expect reactive dye prices to increase. Companies like Bodal Chemicals, Kiri Industries, they tend to benefit because of this price hike. Limited also is in focus because it makes reactive dyes. So a lot is happening in the chemical space. It has come back with a bang because there are some regulatory plus some supply chain issues that the sector is facing right now.
Okay, all right. Sonal, thanks very much for that. So that's all the specialty chemical stocks which are in focus. Dixon Technologies in focus post a Morgan Stanley note. Upasna is here to tell us more about that. Upasna.
Technologies, it's clearly a story of two tales. Last week also we saw certain brokerages having both positive and a negative bias on the stock, but this week the stock continues to remain in focus as Morgan Stanley has downgraded to an underweight call and increased the target price to 11,563 per share. Now this downgrade the brokerage is given on the back of a higher competition that it is seeing in its core EMS business post the end of its incentive period is what they've indicated. Importantly, they see an earnings growth slowdown from FY27 to FY30 is what they have said. Now, coming to the company's component manufacturing, they believe that it is a step in the right direction, but it could be tougher to execute than as compared to the company's core EMS business. Now, coming to company's core EMS business, they believe the earnings is likely to slow down here to 46% from FY25 to FY27 and 18% slowdown is what they foresee from FY27 to FY30. Now, coming to their components business, they believe that it is contingent on tech tie-ups, approvals and cost controls, which could weigh down. Now, coming to company's display fabrication, now they see a deep cyclical business. It requires higher investment and also R&D spending, which makes it a highly capital intensive segment. So overall, the brokerage sees a downgrade with a target price of 11,563 per share.
All right, Upasna, thank you so much for joining us with all those details. With that, we'll slip into a break. As we do that, here is some good news for our viewers. India's business news leaders now click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles and financial word updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen. Welcome back. You're still tuned into Trading Hour on CNBC-TV18. Let's go across to our colleague Parikshit. He's joining us with what he's picking up over India-US trade talks. Parikshit?
Well, yes, India-US trade talks have entered the final phase before the 9th July deadline. We're told by sources that there is yet to be consensus on key issues around tariffs, especially the average tariffs. The United States wants to impose a 10% baseline tariff on Indian goods. India, on the other hand, wants zero duty access and treatment. And we want preferential access compared to markets such as Vietnam, Cambodia, Bangladesh and Indonesia as well. The reason why India is seeking zero duty or lower tariffs is because before the 2nd of April, the average US tariffs on Indian goods was 3.3%. Having said that, we are also yet to come to an agreement on tariffs on steel. Now, the US has imposed a 25% or 26% tariff on steel coming in from all nations. And India is trying to seek an exemption from that. Whether that is going to happen remains to be seen. But US at this point remains adamant that, yes, the tariff on steel will remain. The bigger red line and the bigger issue right now is agriculture and dairy. US wants access for genetically modified crops. They want access for wheat, rice, dairy products, American wheat, rice and dairy products in India. And India has conveyed that these are absolute red lines in the negotiation. And if the US is going to press for access in agriculture and dairy, then India will have no choice but to walk out of those negotiations. So it remains to be seen whether US will respect India's concerns, especially because India has kept out agriculture and dairy from all our trade deals, including with the UK and also with the European Union, which is under negotiation. But what is positive is that the White House spokesperson has said that the Trump administration is working on trade deals and they are going to have an update on India very soon. So possibly we could see some development over the next few days, but the next 2 to 3 days, we're told, are very crucial in negotiations. One negotiating team is still in Washington, D.C. We're told that Rajesh Agrawal, who's our chief negotiator for this trade deal, is still camping in Washington, D.C. to get things done.
Okay, all right. Thank you so much, Parikshit, for joining us with all those details. We'll keep coming back to you for more updates. For the markets, well, Nifty is in the red right now. It's an 11-point downtick on that one. The Sensex too, just flat, but with some negative bias. So markets at the day's low. The mid-cap index was underperforming. That continues to be the case. That index is down around 0.5% at the day's low as well. We'll do one thing. We'll take your leave on this edition of Trading Hour. Stay tuned. Halftime report is up next.